Hello and welcome to OA Accountancy Staff. In today's lesson, we'll be continuing with a part 2 of the books of account or accounting books. In the previous video, we told the books of account, the reasons for keeping transactions in these books of accounts, and then we emphasized on the subsidiary books or the books of first entry, the day books or the books of original entry. If you are new to this channel, kindly subscribe and share for the benefit of others. In today's video, we will be looking at the principal books. But before then, we said that the subsidiary books are subdivided into 7, and they are the sales day book, the purchases day book, or purchases journal or purchases book. We have the sales returns, we have the purchases returns, we have the cash book, we have the petty cash book, and finally we have the general journal also. On the other hand, which is the principal books, we said that some scholars classify the principal books into 2, and they are the ledgers and then the cash book. Another scholars also consider the cash book to be part of the ledgers, and in this case, the principal books under their thought is classified or grouped into 1, which is only the ledgers. So we will be going by the first school of thought, which classify the principal books into 2, which are the ledgers and then the cash book. But before then, one may ask, why is cash book classified as a principal book as well as a subsidiary book? Because under the subsidiary books, the cash book can be found. Same as under the principal book, the cash book is here. So one may ask, why is cash book considered as a principal book as well as a subsidiary book? And the reason is, we said earlier that the subsidiary books, they are the books into which accounting transactions are first recorded. Due to this, the cash book is permitted to be considered as a subsidiary book because under the uses of the cash book, we said that it is used to record all cash transactions, and this cash book is the book into which all cash and bank transactions are first recorded. So due to this cash book is permitted or qualifies to be a subsidiary book. On the principal books too, we said earlier that the principal books are the books that goes by the double entry principle. The cash book here also goes by the double entry principle, and again, the cash book qualifies to be called a principal book because the cash book here can perform any function of the cash account, which is a general ledger. So the cash book here, though it is a subsidiary book, but it is considered as a principal book because it can do any other thing that a cash account, which is a general ledger, can do. So the cash book here is considered as a principal book because firstly, it goes by the double entry principles, and secondly, it can replace or it can do any other thing that the cash account, which is a ledger, is capable of doing. So this is the reason why the cash book is considered as a subsidiary as well as a principal book. So in today's lesson, we will be emphasizing on the ledgers and then the cash book because the subsidiary books has been dealt with in the previous video. But mind you, in our subsequent videos, we will be tackling the various financial accounting topics for WASSCE students, and the financial reporting standards for the tertiary level. The first school of thought subdivides the principal books into two, and they are the ledgers and then the cash book. So, the ledger is a principal book accounting that contains accounts or records of a business, because we are saying that under the principal book, that's where we will find the ledgers. So, in definition of ledgers, it's a principal book in accounting that contains accounts or records of a business. So, in saying this, ledgers contains account, and account is a page of a ledger. Okay, so after we knowing what a ledger is, let's proceed by looking at the subdivision of this ledger. Broadly, ledgers are grouped into two, and they are the personal and impersonal ledgers. Personal ledger, they are subdivided into two, and they are the sales ledger and then the purchases ledger. In our definition of ledger, we said a ledger is a principal book in accounting that contains accounts or records of business. So, the sales ledger, however, is also a type of ledger that contains only accounts relating to debtors. It can also be called the debtors ledger. So, the sales ledger can also be called the debtors ledger. The purchases ledger also is also a type of ledger that contains only accounts relating to creditors. Due to this, the purchases ledger can also be called the creditors ledger. Because these two ledgers contains accounts relating to people, and in business, when we say a person can be both an artificial or a natural person. So a business is considered as a person. Okay, so under the impersonal ledgers too, they are subdivided into two, and they are the general or the nominal ledger and then the private ledger. The private ledger contains accounts relating to only the owner. Example of such accounts includes the capital and then the drawings account. The general ledger, however, is also a ledger that contains accounts that cannot be recognized in the above listed ledgers. Thus, when an account is not a debtor's account, nor a creditor's account, or a private account. Examples of such accounts include the sales account, the purchases account, the returns invoice account, and then the assets account. Okay, so after we knowing what a ledger is, the subdivision of ledgers, let's proceed by finally looking at the cash book. The cash book is grouped into three, and they are a single or one column cash book, the double or two column cash book, and then the triple column cash book. The main distinction between these single, double, and triple column cash books are the amount side. In every cash book, we have the dates, we have the particulars, we have, let's say, ledger folio, and then we have the amount. Then you bring your currency sign. On the credit side too, we have the date, particulars, we have ledger folio and amount. Then you bring your currency sign. So this is how a typical single column cash book looks like. The difference between the single and then the double column cash book is the amount side. On the double column or two column cash book, it is having two different columns for amount. And in this cash book, the amount section are divided into two. The first to cater for the cash transactions and the other one for the bank transactions. In any case, you bring your currency sign. On the credit side too, it is divided into two. The first for cash and the other one for bank. Under the triple column cash book too, the main difference between the single, the double, and the triple column, as we said earlier, is the amount side. Under the triple column, it is having three different columns for amounts, and they are the discount, the cash, and bank. So under the triple column cash book, the amount side are divided into three. The first for discount, the second for cash, and the third for bank transactions. Same as in the credit side. So the credit side too is subdivided into three. The first for discount, the second for cash, and lastly for bank transactions. Thank you for joining the lesson. If you have any question, kindly drop on the comment section. If you are new to this channel, kindly subscribe and share for the benefit of others. Until we meet again, it is bye for now.